Today we're discussing the recent surge in the US dollar as global financial markets react to escalating geopolitical tensions in the Middle East, specifically the unfolding conflict between the United States, Israel, and Iran. What began as military strikes has rapidly expanded into a broader crisis, influencing everything from currency markets to commodity prices and investor confidence. The US dollar has climbed to a 5-week high as investors seek safety and shelter from growing economic uncertainty. Over the past few days, geopolitical risk has suddenly escalated, triggered by reports of significant US and Israeli military strikes on Iran. These operations, which included damage to energy infrastructure and have reportedly resulted in the death of Iran's supreme leader, have raised fears of broader Middle East war. As a result, international markets have reacted sharply. Oil prices have surged, commodity markets are volatile, and global stock indices are under pressure. These kinds of geopolitical flashpoints tend to produce what economists and traders call a risk-off environment, where investors flee from assets tied to economic growth and shift into perceived safe havens. And in the world of finance, one of the most classic safe havens is the US dollar. According to the latest market data, the US dollar index, which measures the greenback's strength against a basket of major world currencies, climbed by about 0.5% to around 98 on Monday. This was its highest level in roughly 5 weeks. But why is this happening? Two main dynamics are at work. 1. Flight to safety. In times of uncertainty and market stress, global investors tend to move capital into assets perceived as stable and less risky. The US dollar, backed by the world's largest economy and deep financial markets, is one of the primary beneficiaries of this behavior. Even if other indicators might suggest slower growth or inflation, the dollar often strengthens simply because investors prefer its liquidity and global acceptance during crises. 2. Weakness in other major currencies. Alongside the dollar's strength, several major currencies, including the euro, British pound, and some Asian currencies, have weakened. For example, the euro slid against the dollar, and commodity-linked currencies showed losses, partly because rising oil prices put pressure on importers' economies. This combination of safe haven demand and relative weakness in other currencies pushed the dollar upward, allowing it to reach a 5-week peak. Geopolitical events driving markets. Let's look more closely at the geopolitical backdrop influencing these market moves. Over the weekend, US and Israeli forces launched broad military strikes against Iranian targets, significantly raising tensions in the region. Reports indicate that key Iranian leadership was targeted, contributing to heightened fears of a prolonged conflict. Iran responded with missile attacks across several neighboring states in the Gulf region, including strikes on US assets and allied bases. This retaliation has expanded the scope of the crisis and deepened uncertainty. The Strait of Hormuz, a key maritime choke point through which roughly 20% of the world's oil exports travel, has seen severe disruption to shipping and insurance coverage. This has amplified fears about potential supply shortages and further oil price spikes. These developments have put global energy markets on edge, and they are directly linked to the surge in oil and commodity prices. Oil and commodity impact. Oil prices have moved sharply higher, which normally exerts inflationary pressure on economies around the world. Brent crude, one of the main global benchmarks, surged almost 9% in early trading, while US crude futures jumped over 8%. Gold, another traditional safe haven, also climbed as investors sought refuge from the risks posed by geopolitical uncertainty. Rising oil prices have several knock-on effects. Higher costs for energy importers, which can slow economic growth. Inflationary pressure, because fuel affects transportation, manufacturing, and basic commodity prices. Increased costs for consumers, leading to potential political and economic ramifications. Yet even as oil and gold rise, traditionally inflationary forces, the US dollar has benefited from safe haven status, illustrating the complex way markets behave during crises. Equity markets have also felt the impact. In many regions, stocks have fallen as investors reassess risk and shift capital into safer assets such as government bonds, gold, and of course, the US dollar. Major indices in Europe, Asia, and the United States showed declines on Monday, reflecting a broader risk-off trend. Central banks and policymakers are now closely watching inflation data and currency moves. There's increasing speculation that geopolitical uncertainty and rising commodity prices might delay interest rate cuts in major economies, including the United States. This could further bolster the dollar if the Federal Reserve keeps rates higher for longer than previously expected, another reason why the dollar remains attractive in the short term. What this means for the future. As of now, the situation remains fluid. The duration and intensity of the conflict will be critical in shaping markets in the weeks ahead. Analysts warn that if tensions continue or escalate further, we could see continued strength in the US dollar, further rises in oil and commodity prices, greater volatility in global stock markets, potential upward pressure on inflation, broader disruptions to global trade and supply chains. It's also possible that diplomatic or military developments could temporarily soothe markets and lead to a reversal in safe haven asset flows, though at present, risk aversion remains high. In summary, the US dollar's rise to a 5-week high reflects a classic flight to safety amid geopolitical turmoil. Investors worldwide are reacting not only to military developments in the Middle East, but also to the broader economic implications, particularly rising oil prices, inflation concerns, and shifting expectations for monetary policy. With global markets on edge, the dollar's strength highlights how geopolitical risk can quickly reshape financial behavior and asset pricing.